Hi, everybody. It's Mike from the Home Happy team giving an update on January 25th. Well, the bad news is that the Bank of Canada decided to raise prime once again by a quarter percent, so 25 beeps. That's going to translate into prime going up another 25 beeps, 0.25. The good news is it seems like this is it. And obviously, I'm hesitant to say that because they have not seemed to want to stop previously this year or last year. But we seem to be at the top. So the overnight rate is 4.50%. If you take a look historically, there, you can see how many increases we've had way back at the beginning of last year. We were way down here. We had our first 0.5% increase back then, and then a 1% increase. So we've had a lot of increase. We all know that we're feeling it in our payments or feeling it in our under stress and that kind of thing. But the good news is this looks like it. Most economists agree that this should be the final one. Why do we say that? Well, take a look at this chart. This chart shows you in blue the inflation rate, and you can see where it spiked up all the way up, and now it's come back down to 6.3%, the last report we had. Now with this increase in the overnight rate to 4.5%, it seems like from what the wording in the release today from the Bank of Canada is that they are prepared to sit still for a little while, assuming that we see inflation numbers coming into line. The other number that hurts the rates is the unemployment rate, meaning that everybody's working and therefore puts pressure on increasing wages, and that causes inflation. So overall, it's hard to predict exactly what's going to happen. I think, if anything, the last couple of years have taught us we shouldn't predict anything. But our best guess is that this is it, and that we're going to see ourselves probably sliding into a bit of a recession through the year, and then possibly seeing rates come down either at the end of the year or definitely the prediction is that rates will come down by next year. So a couple other stats to show you. This is just a quick real estate average price in the Greater Vancouver. You can see that it peaked back in January, March of last year, and then since then it's been coming down, not steadily, but a little bit. It's still very high, obviously, and I don't expect that number to change dramatically. It's not going to drop super low. There's just too much demand. There's too many people still wanting to buy property. So if you're owning your home, that means you probably have significant equity, and that's something to think about. Even at these higher rates, cash flow is now king, and if you need to get access to some of that equity, we can definitely discuss that with you. We have a lot of options you may not be aware of. So we'd love to have a quick chat with you. All it takes is 10 minutes to see where you're at. You don't have to do anything, but we just want to make sure you feel comfortable with where you're at. The other side of this is that if you are looking at buying, now might be the best time. I know it doesn't seem like it, but it means that there's probably less people looking at the same property you'd like to buy. It means you can make an offer. You can make it subject to financing, subject to inspection, all those things that back in normal land that we used to have applied. Now they're back. So it might make sense. And we have some numbers where by buying now compared to last year, you're probably in a better position. For those that bought last year, it is what it is. I think over time, real estate is always a great investment. So I just want to mention that. The other thing to mention is that currently, this is called the bond yields. This is what we look at for fixed rates. This is over the last year. You can see it went up back in June and peaked, and it sort of has peaked a few times. But basically, it's been coming back down. And much like when oil goes down, the gas price doesn't seem to go down very fast. Lenders don't drop their fixed rates very fast. But we are seeing some opportunities arrive from certain lenders. We're getting secret offers. Some of them are calling our variable rate clients and trying to lock them in. Before you do any of that, make sure you talk to us. Let's make sure we have a plan when you're doing this. Make sure you're getting the right rate. But just so you know, this right now, the lenders, the normal rate that they're quoting is around 5.5 to lock in for a 5-year fixed. We're starting to see these rates below 5% and sometimes lower. So it's definitely worth a discussion if that's something you want to think about locking in. We're here to talk to you about that. But overall, the key here is just communication. Make sure you keep us in the loop. We want to help you as much as possible. Make sure you've got the right information to make the right decision. But Thanks very much from the Home Happy team, and have a great day.